weekend analysis going into the week of November 10th, 2013. This is how markets ended the week, and they ended the week with the Dow up 0.94%. S&P 500 managed to stay positive for the week, up 0.51%, and we see that the Nasdaq was slightly down, or let's call it unchanged, down 0.007, so unchanged for the week. Surprisingly, after all that volatility, the market managed to have what we would call a net positive week on the S&P 500 and also on the Dow. So coming into Friday morning, 1 hour into trading, these were my thoughts about the market when the market had opened 1 hour into trading. This is what I sent to subscribers during the day. Eric Muathe, November 8th, 2013. We are looking at markets here. The Dow close to the highs for the day, up about 80. The Nasdaq is up about 1%. Now what I'm going to share with you in this video might bother some of you, because all of us were expecting this market to continue going lower, especially on a day-to-day basis. But I want to share with you what's going on. Here's the Nasdaq daily chart. Take a look at where we've been finding lows in the market. You take this low, that low on the RSI, even close to that low, this low here, draw a straight line. Guess what? Market's trading precisely where it needs to be trading, finding support right there. Hope that makes sense. So that could be where this market starts moving higher again. I know it's frustrating, but that's what could happen. You see the Nasdaq slashing back above 50 today on the daily. That opens up, at least for a day-to-day trade, a big day to the upside. Okay, so the only thing that can really crack this market now, the only thing is in the coming days and weeks, is if it can break below this support line, which is the gray line here. If it can't break below that, then I believe that this thing eventually, slowly, gradually surprises all of us and continues pushing high. I know it's frustrating, but that's what the charts look like. If you take a look at the S&P 500 hourly chart, then you start seeing, evidence why the market is trying to spike. And it's very obvious. This is where the rally began, or the most recent move, which was this lows to this high. And you can see, so we draw a straight line, which is this line here that I've drawn. So this line, that's the straight line. Take a look at where the market is finding support, precisely on that line. So this is where the market could start moving higher. If you take a look at the MACDs, crossover here, after this trend break, this crossover could be significant. But you'd like the MACDs to be trading above zero to confirm that there is strength. But this is where they start building. So that's not a bad looking hourly chart if you're bullish. If you take a look at the other instrument that I like to follow, the airline instrument, take a look at the fact that this, take the lows there and this low, we are yet to break that trend line. So that's still a strong market. If you take these lows, this low and this low, draw a straight line, we are about to recapture that level, which is very strong. So exactly what you want. Another way to look at this is to take a look at the, okay, let's take a look at the MACD quickly here. And you see the MACDs here are also showing that they could find support here and here. Of course, you want them above zero, but they could be trying to stabilize around there. So I don't think the market really spikes and moves higher continuously. It's going to pause for a little bit because those MACD hourlies are not above zero. Take a look at the Qqq Hourly. Quite simply here is the rally began here, which is the dotted line. So that was a perfect entry point. Draw a straight line, which is this level here. And take a look at this. Perfect. I mean, markets surprise me in how they dance around. Take a look at support precisely on the line there. And the fact that it comes, touches that line and moves back up. Short term, especially if you're a day trader, this is where you want to go along the market. So I don't know how we're going to close or what next week is going to bring. Next week is options expiration. You know, these markets are tricky, but short term, we're starting to see markets that want to bounce. I am surprised by that, but that's what it is. Eric Mwade, I'll have a weekend video for you guys sometime tomorrow morning. Peace and blessings. Now let's take a look at how Asian market closed for the week. Friday's trading, you see that most of the markets were down. Take note of China being down 1%. We see that Japan was down 1%, and so was the Kospi. So the major markets were down in Asia. Take a look at how Europe closed for Friday. You see that the French market here was down slightly. DAX was unchanged, and the FTSE was up slightly on Friday's trading. Now let's take a look at world markets. We're going to begin with Brazil daily chart, and we see that Brazil being down Friday, slightly down here. You can see that we've broken below this RSI support line. So that's a market that wants to go down for now. If you take a look at the MACDs, you'll see that we are breaking this trend here, so moving lower below zero there, and also trying to slash below zero here, which is a bearish looking signal. And also this triangle you see here is actually uniform activity above zero and back below it. So this could be a trap, and I think this tells me that this is probably a break of this zero line, and this market is gonna also be seeing downside pressure. If you take a look at the Brazilian market from a weekly chart, you see that over the last couple of weeks I've been talking about this level here as being resistance because it connects the highs here and here. So this turned into be resistance, and so now we see the market moving below the 10-week moving average and also the 13-week moving average. So that's a market that is in pullback mode. Also notice what we've been talking about, this RSI top lines on the weekly have come into play. That has been confirmed as resistance, and also this level here on the RSI on the weekly has been a level where this market has been stalling, previously stalled here, which is this high, could stall here, which was this high here, stalled here, this high, and over the last couple of weeks we stalled precisely where I was expecting resistance. Don't forget there's also another data point here, which is being the back test of this line here, this line, back test and a failure. So that's a lot of red signals here as far as the Brazilian markets are concerned. Of course, they go normally the direction of gold, and gold has been on pullback mode. If you take a look at the Brazilian market on the MACDs weekly, crossover tending towards zero here, and this could be moving back below zero. That could be another trap indicating momentum to the downside. Now let's take a look at the French market, and we are going to begin with the monthly chart, or actually European markets here. What I want to talk about is this level here on the RSI on the monthly. That right there corresponds to this level here, and that level is the highs before the crash of 2008. And so the RSI has pretty much come back to that level where we had that break in 2007, late 2007. And here we look at, if this market stays negative, that could be an area of resistance as far as that RSI level is concerned right there. So if this turns out to be where it turns around and heads lower, that's a major sell signal on the monthly chart. Now on the flip side, if you take a look at the German weekly, you see that it still remains above breakout levels here. So this is a strong market, and also we see that it hasn't yet given us any sell signals. This market continues to be strong, having moved above the top lines here, which is this red line, having moved above the red line there. So that's a breakout. So here's a strong market in Europe. If you take a look at the monthly for the German market, we see that it is also back at this critical level here. This level here happens to be the highs in 2008, early 2008, late 2007. And so if you draw a straight line, this is where you'd expect resistance. And as you can see, as of right now, depending on how we close for the month and how we trade for the rest of this month, this level here is starting to shape up to be monthly resistance. So if it stays negative for the month of November and beyond, that could be a major sell signal, but the weekly still continues to be looking okay. If you take a look at the Hong Kong market, we're taking a look at the weekly, you'll see this market, we've been talking about this. You took the highs here on the weekly, the highs there, this weekly closing high there, draw a straight line. See, we've been bumping heads here on the tops, and now looking to point lower. Also the RSI was showing this is where you'd expect resistance here. It was resistance previously at that particular point, which was a high, and now we formed a double top here on the Hong Kong market. So this signals to me prices moving lower, and we've already started seeing that. Take a look at the monthly for the Hong Kong market, and what you see here is there was resistance here from those highs there, these highs going back to 2011. Draw a straight line and see this market has been failing to hold above those levels over the last couple of months, actually the whole of 2013. Take a look at where you'd expect RSI resistance is here. That was the high previously here, which was this high, and now this line connecting that high and this high gives you resistance right there. So the only way this market can break out and move higher is if the RSI on the weekly can be breached to the upside. So that's the only way this market can move higher. Right now we are looking at this market showing a sell signal on the monthly, which could indicate month to month this is going to be a market that is going to be trending lower. Now let's take a look at the London market, and we're going to begin with the London market from a daily view. What I was wanting to show here is this is where the market closed higher here in late May, and we came close to that level there, seemed to have stalled as the high there. Also the RSI comes into play here. As you can see, every time we stall at this level here, which is this high, and recently we moved above it and back below it, so this here becomes a short-term sell signal as far as the London market is concerned. If you take a look at this from a weekly standpoint, we see that there was a breakout potential at these highs here of about 67.23, and we see we stalled precisely at that level there, did not close above that. So that's something to keep watching. When I've talked about this over the last couple of weeks, RSI resistance at this level on the weekly right there. So this could be where we start seeing markets turning around as far as the London market is concerned. We'll keep an eye on that. The only way this market moves higher is if it can break out above this level here. As of right now, it looks like it's resistance, so probably we're going to be seeing this market also pull back. Take a look at China. Begin with the daily, trading below the 50-day moving average here, also trading below the 200-day moving average, which is here. So also seems like we broke this RSI support line there over the last couple of days, and this one still remains on pullback mode. We'll see how far it can go. I don't see anything there that tells me it's a buy at this particular point. If you take a look at the MACDs, you see that they're fresh break below zero there could suggest momentum still remains to the downside. If you take a look at this one from a weekly chart, which is a Chinese market, over the last couple of weeks I've been talking about this price channel line here on the top, and this has been on a daily closing basis, resistance here, and also intra-week or intra-day we've been unable to close above that. Now back below the 10-week moving average. This is a market that is in pullback mode. Also recently we formed a double top here on the weekly RSI, suggesting that pressure is to the downside. That's why this market has been still on pullback mode. If you take a look at the MACDs, you see that Right here we were just rejected as we try to move above zero here. So this crossing over here is a red flag. Moving back below zero here is also another red flag. So the Chinese market has yet to show that it has potential to move higher. If you take a look at Japan daily, you see that we were trading in this wedge formation here after multiple resistance levels here, here, and here. So now Friday's close brings us below that channel. Also is breaking this line here on the RSI on the daily, tells me that that's a break that could be heading lower. If you take a look at the MACDs for the Japanese market, we see that moving below zero here and also staying below zero here indicates that momentum is still to the downside. Now let's take a look at commodities. We're going to take a look at gold, silver, copper, and also steel. We're going to take a look at how the coal sector is doing. Luckily, from last week's analysis, we had the direction correctly in gold. So let's see what we have in store. And also I'm going to have the stock picks at the end of this commodity section review. So why don't we begin with the Crb Index here, which shows that, and this does not reflect Friday's close, but let's just say closing around here, slightly down. More importantly, that move to fresh 52-week close, there is a break of that trend line there. And also notice that the 10-week moving average is moving to fresh lows. So there's no momentum here for now. If we take a look at the Crb index from a daily view, we see that trading at 52-week close